FTSE break
Both,
to begin with?
both of them. No, FTSE band, I think, first.
Okay. Let's get that up then, right. Okay.
Yeah, FTSE band, Giles, is coming to the top of a band now. These are modified acceleration bands, and we're getting towards a 50% retracement. I know people like 50% retracements from the highs to the lows, and that's sort of quite a significant level, and that's about this level now, 53.20 odd, and we're now we've gone through that. We're 53.92, which is very bullish. This is bullish because it's going to take us to the next level of 54.50 and then to 56. That's the ultimate short-term target. This is supported by the indicators above, the relative strength indicator, suggesting a momentum indicator moving into positive territory. And what I quite like is this Williams percentile. It's like a stochastic, but I'm using it here as an overbought indicator. It's overbought. We know it's overbought, but it wants to go higher. So basically, yes, it was oversold in July. Sorry, in late July, and it's coming early July, and it's now moving higher quite strongly. So it's looking good. So FTSE is okay in this present stance, looking for 54.50, 5600.
So it's a buy.
It's a buy, yeah. It is a buy now,
okay,
yeah.
Let's look at FTSE break.
FTSE break. Let's look at another little. I always like to look at FTSE from different angles. This is why weren't we in sooner? And some people were. This is using divergence of that MACD. So the short-term moving average difference of between, and the indicator above suggests that it wasn't hitting new lows. And the index was in early July, and now it's supporting as a momentum indicator that the index is going to go higher. It's certainly moving above its 200-day moving average, which is key. Support around the 5100 level, with that around those sort of levels, with the 50-day. I don't really go too much on those charts. I like the fluidity of this market. I like the MACD as an indicator here. It's super to tell you which way it's going to go. It was topping out at the top, buy near the lows for those who wanted to take a speculative go, and it's going to go higher probably to those sort of levels, 54, 50, 56 before we see some cooling off.
Okay, Bill, let's have a look at gold now.
Gold is going to suffer. And we're going to see gold suffering here. It's at the lower end of the band. Remember the band, FTSE was at the top end of the band. This is the lower end of the band now.
Right.
Gold's going to have a very quiet season now, so we're moving away from gold. We're moving towards other metals, other securities now, because gold has lost its luster of security. We've had the as a safe haven and store of wealth. I think that's going to come down further down the line as inflation does hit the markets when recovery does come in. But at the moment, the essence of looking at bank defaults has gone for the moment, and I think gold, the demand for gold as a safe haven is going to disappear. And I expect further weakness ahead. Indicators above suggest it's going to cool off a little bit, although the long-term trend measured by the inverse Fisher transform of the RSI suggests that we're still in an upward trend. That's been cooling off without dramatic movement, I would think. It's certainly volatile, but I would think cooling off before picking up in its best month of the year in September.
Okay, Bill, thank you very much for that. Now let's move on to copper.
Copper is one metal which is going to benefit, which is funny enough because it's all linked to this currency thing, because the banks are now stable, be more stable now. They're only 7 out of the 91, failed the stress test, wasn't a disaster, wasn't the doom and gloom everyone forecast. Currency, European currency now is, euro is now to 1.3, which is very good. The US dollar we looked at last week, Giles, didn't we? That's weakening, and one of the beneficiaries is going to be copper. Dr. Copper is the measure where the market's going to go. If the market goes up, copper goes up. It's in so many uses. Although the housing market we hear is going to be flat for the next X number of years because of defaults and the supply and the restrictions on getting the loans, even though the interest rates are low. This is not necessarily a good market for housing. This is a good industrial metal. Industry is thriving. The third world that was, now the industrial nations coming through are supportive of the metals here, of demand for metals. So it's a good economic measure, this barometer, and I think this will go higher.
That sounds an interesting one, Bill. All right, let's move on now. What's AAL?
Anglo-American, just as a share to have a look at. It's what share should we be buying? Should be benefiting from copper price rises, and this is one that will go higher possibly. And I think although the trend is short-term is down, the volume levels are picking up a bit and it's heading towards the top of the band. Would expect this to break at about 27, upside possibly 29.30 on restructuring and demand for metals.
So it's a buy right now, is it?
It's a buy, yeah. I mean, people are looking around for stuff which isn't too high, because a lot of stuff has risen up quite sharply already. A lot of engineering companies are going up very strongly. And so where does the focus where should it be? Well, this is a dull one. It's steady in its recovery phase.
Okay, Bill, the next one is the JP Morgan Indian Index.
Yeah, it's a nice chart, this one.
Yeah, nice consolidation there.
It's absolutely spot on.
Consolidation.
That's what you want to see. Yeah, low, and that means low volatility, which is ideal for breakouts that work. Most breakouts don't work because they go, volatility is too high. You want low volatility, and this is what the consolidation equals: low volatility. Good volume behind this one. Giles moving averages the right way around. Has been oversold coming out of that phase. This one, long term, it was shaky. You see at the top, it's just in positive zone all the way through. One of the strongest markets around. This one is poised to go higher. I know a lot of analysts like this one because of its growth potential. And this is one to watch and one to buy, I think.
Great stuff, Bill. And finally, let me just get the...
We've got a couple more in, haven't you?
Yeah, we've got LTIM.
Tin. Leveraged tin. Tin, yeah, the Indonesian, it's a very lumpy market. This is a very, very volatile market, very small market, one of the smallest markets in London, this one. So, for metals. And Indonesian market has been... has withdrawn a lot of its supplies because of illegal mining, clamped down on that, and also the supplies have been used up. Good industrial metal. It's sort of the industrial benchmark also of where the industrial metals are going to go. Highly volatile, very exciting play. Probably overstretched, I think, at the moment there, but one to watch this one. When it cools off a bit, one to have a go at, certainly in that phase of breaking out, and it's certainly very lively. So one of the challenges is moving into long-term trend from the inverse Fisher transformers of the RSI, so that's moving positive now, so it has got that behind it, and as well as short-term moving averages supporting it, but it might be slightly overbought, but certainly one to watch.
Great stuff. That's Bill Rook from Redmayne Bentley. Bill, we'll chat again next week.